My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/beststockstrategy. The Wealth and Health Podcast is brought to you by beststockstrategy.com. Why you must be directional when trading options. The reality is that you're simply not going to collect enough premium if your only options trading strategy is to grow your account by collecting premium. During a bull market, you might not beat the S&P 500, or if you do, then you're selling strike prices which are too close to the current market price, and therefore you're leaving yourself susceptible to a large volatility increase, or if the market pulls back by 5 to 10%, having all of your short put positions be challenged and become in the money. For my 15 years of trading options, I found that combining multiple strategies and collecting premium using ratio spreads, hedging so that way you can profit from large volatility increases and spikes in VIX is the best way to trade. That way you can be profitable in all market environments. Yes, the hedges will act as a small anchor and they will slow you down slightly. If the market goes up 20% like it did in 2023, then you might show a small loss on those hedges. But the benefit of those hedges is that they can increase in value from anywhere from 10 to 40 to 50 times if we experience another time like March 2020. But you don't need a situation like that in order to crush the market and do extremely well. Just a few weeks ago in March 2024, I structured a trade in NVIDIA where I ended up closing it out for a $6,000 profit. And the way that I structured the trade allowed me to profit significantly from the increase in NVIDIA. And the only risk that I had would be if NVIDIA fell below $200. So yeah, I definitely understand that if you want to play devil's advocate, you can make the case that NVIDIA was trading at about $100 in early 2023. But recently it's been trading at about $900. So owning it at about $200 while simultaneously profiting from the increase in the stock price is a great trade structure. I remember about 4 to 5 years ago, I was speaking with my account manager at E-Trade, and he told me that from his experience, some of the most successful traders are those who occasionally buy options. And I think it's really important to buy options and to be directional, because think about it, if you're not trading directionally and you're not buying options, then you're likely selling a lot of call options in order to get some negative delta in your account. The problem with that is if the market pulls back and if the market crashes, you're going to lose those negative deltas and then your short put options are going to be challenged. And you're not going to be able to sell enough call options to offset the massive increase in delta that your short put options are showing you because of the market crash. As a result, in that situation, the best thing that you could have done would have been to buy protective put options. Or on the opposite end of the spectrum, if we're in a euphoric market, you don't want to hedge to an extreme where your losses on your long put options are going to offset your gains from your short put positions. As a result, the best way that you could possibly profit from a euphoric market or even just a regular bull market is to be directional and to capture some of the upside moves. You can do this with numerous strategies, such as running the wheel, which is not necessarily my favorite strategy, but I do know people who use it effectively and who make a lot of money from running the wheel strategy. Personally, I prefer ratio spreads and other custom strategies that I discuss in my options trading course at beststockstrategy.com/memberships. But overall, I think that the takeaway from this video is that you have to trade directional if your goal is to beat the market while also reducing risk and realizing higher risk-adjusted returns than the S&P 500. David Jaffe with beststockstrategy.com. If you have any questions, leave a comment below and watch this video right here because YouTube believes that you would enjoy it the most. Visit beststockstrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and a review. If you have any questions, visit beststockstrategy.com and send me a message.